Are you thinking about getting a residential mortgage? Have you considered using a mortgage broker? What do brokers actually do? Today, I'm delighted to be chatting with Nigel Codron, who is a mortgage broker here in Kingston upon Thames, who gives us advice on the role of a broker and how they can be of help to you. We also touch on the buy-to-let market as well. Stay tuned. Hello and welcome back to the Alison McWhinnie podcast, where we have conversations on business and wellbeing success. And today I'm absolutely delighted to welcome Nigel Codron to the podcast. Now, Nigel is a mortgage and protection advisor at MB Associates, and he is based in the Kingston upon Thames office. He specialises in residential remortgages and buy-to-let solutions for small portfolio landlords, and will be sharing some expert tips with us in this podcast. To give some background on Nigel, he's had a 40-year career in FMCG sales and consultancy, with extensive experience in the fashion and sports sector, working with a variety of brands that include Burberry, Oxbow, and Extreme Sports brand. He transitioned to the financial services sector in 2023 and has a passion for building long-term relationships with clients to deliver life-changing solutions, which is what he loves most about his job. Nigel, a very warm welcome to the podcast, and thank you for agreeing to come on.
Thank you, Alison. I couldn't have said that better myself.
I'd like to start off with some mortgage broker questions, if you don't mind.
Sure.
And I'd like to explore, first of all, what does a mortgage broker do in the UK?
Right. Okay. So effectively, we are the intermediary between the consumer looking to source a mortgage, whether that's for a residential, a buy-to-let, or even a commercial property, and the lenders. And the way that we operate is that we firstly talk with the client, understand exactly what their needs and objectives and goals are, and then following a fairly intensive fact find, we then go away and source the best product for that client. And I know most people would more than likely ring up their own bank or walk into a building society to source a mortgage. The thing that you have to remember, and what differentiates us from that process, is that a bank, for example, can only offer a client the products that they have. And those products may not necessarily be the best for that client's requirements, and more importantly, the bank's mortgage brokers, they are not allowed to give advice. So coming to an independent mortgage broker, mortgage advisor, you are able not only to source from a huge number of lenders, and you're also being able to tap into their experience and in the knowledge that they will recommend the right product for you. So that, and actually there was an article the other day published in the Intermediary with a report from Santander, a consumer poll that they did with their clients, saying that 80% of their clients felt much happier dealing through a mortgage broker, an intermediary. They felt they were getting a better service and more informed decision making. And let's face it, Alison, getting a mortgage is going to be the biggest financial decision that any individual or joint person has ever made. So it's
Absolutely,
really,
yeah.
really important that they have the right advice.
Yeah. And so a mortgage broker can really align you to the best product for you and get the best deal for
Correct.
you that is possibly available given your circumstances.
Correct. And
Yeah.
that really is the decisive factor. It is the best product for the client,
Yeah.
not just one that we're kind of shoehorning into what we can offer. Because we have access to, well, we're not legitimately allowed to say whole of market, because there are some products that are available but on a consumer basis only. But we have a panel of over 90 lenders, thousands and thousands of mortgage products. And actually, because of the size of our network, we've got about 2,500 advisors in our network. We have access to some exclusive deals that nobody else can offer. So, it is definitely worth speaking to a broker, if you're looking to take out a mortgage.
I've got a cheeky question for you now, Nigel. How
Okay.
much does a mortgage broker cost in the UK?
Well, I can't speak for everyone. Generally speaking, our own company, we charge a one-off broker fee of 495. If it's a repeat remortgage, or it's a client that's been with us for a number of years, we're certainly able to reduce that. But that kind of is a standard in the industry. There are some who charge more. There's some who charge nothing, but I'm a great believer in you get what you pay for. So, charging 495 as a broker fee, is a kind of a minimal investment.
Yeah. And what do you think is going to happen to interest rates going forward?
Oh, that's the $64,000 question. I'd be a very rich man, Alison, if I knew the answer to that. But I think it's generally accepted that mortgage rates, well, interest rates generally, are on their way down. We're expecting the MPC meeting on the 18th of December to probably shave another quarter point off the Bank of England base rate. The lender portfolio that we have already started shaving interest rates themselves on mortgages. So I think it's more than likely that it will come down. And I think the prediction for 2026 is a further softening. I think ultimately the Bank of England base rate will end up somewhere between 3 and 3.5% over the next 12 to 18 months. But if you consider today that the base rate is at 4%, we're still able to get sub 4% mortgages. So that shows you the long-term market. People are pricing in for a rate reduction.
And just for viewers who are watching this, we're recording this interview on the 11th of December 2025. So any figures we give are relevant to today's period if you're watching it several months down the line.
Yes,
Um,
very good point, Alison, because anything can change.
Anything can happen,
Exactly.
can't it?
Anything can happen.
Can a mortgage broker still help you if you're self-employed or if you have bad credit?
Okay, well, that's two distinct questions. So it is a myth that you can't get a mortgage if you're self-employed. Certainly, the rules are slightly different. You do need to provide at least 2 years tax returns. There's a form that's downloadable off your own government gateway site called an SA 302. That's your tax year overview and a tax calculation, which confirms the amount of tax you have paid. And those for 2 years, 2 years tax calcs and tax year overviews are sufficient to substantiate income. There are some lenders that would do it with just a year, but again, the interest rates would be slightly higher because it is a bit more of a risk, obviously, because they've only got 1 year. Nobody knows what the next year will bring. In the case of being a 2 year tax information, lenders will generally take either an average or the lowest of the two to base their calculations. But you can definitely get a mortgage if you are self-employed. So the second part of that question is if you've got bad credit. And this is something that, again, is solvable. There's all sorts of different criteria depending on the lender and depending on the type of default that you've got on your file. It's certainly advisable for anyone wishing to take out a mortgage to download their credit file just to check what's on there, because every lender will do a credit search. There are several occasions where I've experienced somebody telling me, oh no, I've got no problem on my credit file, and then you run the decision in principle and it's declined. So much better that the customer is very open with the broker in discussing those things. I know it's a bit embarrassing, but it's going to come out anyway. So back to the severity. So there's specialist lenders who will lend to people with adverse credit, but if it's mispayments, particularly if it was more than 2 years ago, it's less likely to impair their decision process. If you've got CCJs, again, it will depend if it's settled or not and how long ago it will be. And things like CCJs for telecommunications under £250, again, lots of lenders will waive that. So, they're kind of more looking at people who have had, poor credit history. But there's a lender for pretty much every situation, although that it comes at a price. So you'll definitely pay more in interest for a mortgage if you've got bad credit than you would if you haven't. So, but you are mortgageable.
And what sort of documents do you need to take to the mortgage broker as part of the process? What sort of documents should we be gathering before we come to visit?
Well, it doesn't necessarily have to be before you visit. This again is something that's covered in the initial consultation that we hold with a client. So we definitely need proof of ID. So that would be a passport or a driving license, proof of address. So a council tax bill, utility bill, within the last 3 months, and then kind of to support the financials, you need 3 months pay slips, 3 months bank statements. If it is a joint mortgage application, then obviously bank statements or documents from both parties. Likewise, we need proof of deposit. So a savings account, a help to buy ISA, etc. Again, we'd need to see proof of the money and where it's come from. One of the big things that's happening now, particularly for first-time buyers, is gifted deposits from parents or family. Likewise, there is a big issue today around money laundering. So we have to prove where that money's come from. So a person gifting a deposit to their child has to supply their own 3 months bank statement supporting where the money's come from, and additionally will be required to sign a gifted deposit letter waiving their interest in the property. It's quite stringent. Not many people are aware that that's part of the requirements, but as I said, money laundering is a big issue today.
And what kind of questions will a broker ask you when you go to see them? I'd imagine things like how risk averse you are and that sort of thing.
Yes, that's part of it. I mean, the initial consultation is kind of a bit more basic. So, name, address, work history, residential history, do they own any other properties, etc. And so that's probably 15, 20 minutes of the conversation. And then the rest 10, 15 minutes is spent with me just kind of exploring their lifestyle, how long do they intend to be in the property, so we can gauge whether, a 2-year or 5-year product is better suited to their needs. Are they planning on having kids? Do they have kids? What about, childcare costs, which are all factored into the equation? I mean, we certainly don't want to recommend a mortgage solution to a client where he's going to be, paying so much money every month that he can't afford some basic essentials in living, socializing, clothing, etc. So, yeah, and we know now, what sounds reasonable and what doesn't sound reasonable. And of course, that's all supported by their bank statements to show that what they're telling me, or any other broker for that matter, I mean, is truthful. And it is beholden on us as the broker, as the intermediary, to double check all of that documentation prior to submitting it to the lender, because once it goes to the underwriting team, who will also pour through those documents with a fine tooth comb. It's not all done, by a computer. I mean, the initial checks are, but once it goes into full application, there is a physical person, checking everything. So everything that we're told has to be supported by documentary evidence.
And how long does the mortgage process normally take around with a broker?
Okay. So horrendously, buying a property at the moment in England is something 3 to 4 months, something in that ilk. However, that's not generally down to the broker. So the way that I operate, Alison, it would be I'd have an initial conversation with a client, probably 10 minutes or so, just to get a rough overview of what they're looking to achieve. I'd then fix a meeting to go through the fact find. I mean, that could be the next day, certainly within a few days. Once they've given me all that information and sent me the supporting documents, I will then do my sourcing and come up with a recommendation. Generally, that's anything from 2 days to 5 days, depending on how busy I am at any particular time. And it does kind of depend. Certain months is much busier than others. And then once I've had a second meeting with the client to actually present the solution and it's approved, the full application would go in within 24 hours. So this could all be done within a week. So that's pretty quick. Most of the lenders today, their SLAs 5 to 7 working days to process the information and produce a formal offer to the client. So let's say worst case scenario, 3 weeks, from that moment. And then once the offer comes in, you've now got the conveyancing issue. And that's where it all goes a bit pear-shaped. And sorry for any conveyancing lawyers that are watching this, but that the situation is rather archaic in this country. And 2 months is nothing for the legal process. The communication between one party solicitor and the other is crazy. So certainly, I mean, look, it can be done quickly if everyone's on the ball, but realistically, you've got to be looking at a 3-month process. And of course, if you're buying in a chain, of course, it might not be you that has the problem. It could be the person whose house you're buying, who's buying their house. So it's a bit hit and miss. Let's put it that way.
Sure.
But from our side, from the lender's perspective and broker's perspective, within 3 weeks is definitely achievable.
And are mortgage brokers regulated in the UK? And if yes, how?
So yes, is the answer. Highly regulated. So we come under the Financial Conduct Authority, and each one of us has to pass an exam. It's called CeMAP. certificate of mortgage and protection. So you're not allowed to trade without that CeMAP qualification. Once you have that qualification, you join a network, and again, they would put you through their own onboarding process, and their own compliance checks. So that is again part of the procedure. And then once you've done, maybe 3 months, 6 months of writing mortgages, where every time you're being checked, every 3 months or so, you could get a case pulled. Every 6 months, we don't know. It's totally randomly done, or maybe not so randomly done, I don't know, by the compliance teams, and they just go through each of our cases with a fine-tooth comb. And actually, that's the part that I wasn't fully aware of when I transitioned to this industry. There's a huge amount of administration behind all of this. With on our system, we have to write very, very copious notes about conversations, about decisions, the decision process, because yes, it's all, and that the FCA could suddenly pick on one of my cases, and they'd also like to see that everything that I've recommended, is right for that client. And duty of care is paramount right now.
Sure. And are there brokers for business mortgages as well, or is it just for residential mortgages?
So yes, commercial mortgages is a completely separate thing. They are not regulated, so it's a completely different animal. Completely, oh, I've just said completely twice. So we have within our company two people, in fact, who are specialists in doing commercial mortgages. It's a lot more complicated. But because you're obviously, buying a commercial property, the rules and regulations are slightly different. But that's not my sphere of expertise, so I can't comment further. But it is a completely separate, not to be confused with a limited company that's buying buy-to-let properties. That is regulated via a residential broker like myself.
Yep. And can a UK mortgage broker help with mortgages for overseas properties?
No,
No.
no lenders will touch that. Don't ask me why, but that's just part of the rules and regulations. I did have a client actually who owned a property in Spain, and he wanted to remortgage it, but it's not something that the UK banks and lenders would do. So
Okay. So I'd like to ask a couple of mortgage questions. How much can you borrow these days for a mortgage in the UK?
Well, there is a kind of formula that most lenders would use. It's not uncommon to use a multiple of between 5 and 5.5 times income. Some lenders would in fact go to 6 times income. It's a bit worrying because that's quite a lot of money they're borrowing. It does, of course, depend wholly on their credit worthiness and any other financial commitments that they have. But generally speaking, if you're looking for a mortgage, five times your income is a kind of a reasonably safe bet today.
And how much deposit would you need to put down?
Again, 10% is kind of the norm as a first-time buyer. Today's market, 10% deposit, you're getting a rate of around 4.2 to 4.4% interest. There are some lenders that would accept 5% deposit, but then again, rates will increase up to maybe 4.7, 4.8. And obviously, the bigger deposit, And that certainly is applicable for people who are moving up the ladder. So you've obviously got a lump of equity in your current property. So you may only be borrowing 60% of the second home's price. So the interest rates in that instance could well be below 4%. In fact, they
Mhm.
would be below 4%. So it is based on risk. So the higher the loan to value, the bigger the risk for the lender. So they charge more in interest, and
Sure.
vice versa, obviously.
And can first-time buyers get a mortgage easily these days?
Very much so.
Yeah.
Lenders are desperate.
Oh,
Lenders,
right. Good to
lenders are
know.
desperate to attract first-time buyers. Um, I mean, they all have a slice of their overall lending budget, specially reserved for first-time buyers. That's kind of part of their, policy thinking, on the basis that um, you're likely to stay with that lender for a while past the initial fixed term period. It's not always the case because other deals come up. But, some people, I was going to say some people are a bit lazy because it is easier when you get the statement from your own bank saying, okay, your fixed term's coming to an end, your new rate is X, and you just go, okay, yeah, that sounds good, I'll go with that. But if you are a bit shrewd and you want to really test the market, you should definitely go to a broker and make sure that that lender, has still the most competitive rates out there, because the chances are they probably won't.
Yeah. And it's important as well, I think, to bear in mind all the extra costs of buying a property. So I'm thinking solicitors' fees, valuations and service surveys, moving costs. Anything else
Yes.
they should be keeping in mind?
Well, stamp duty, of
Stamp
course,
duty.
depending on the value of the property that they're buying. Um, there are, again, with first-time buyers, um, sometimes you can get free legals, you can get free valuation. It's all about attracting, the new business into their system. So again, and that's what a broker does. He'll find, the most appropriate deal for a client based on those sort of factors. Again, let's say a client only has 10% deposit and very little money, so other spare money. So that in the fact find, I'd be saying to them, well, look, there will be a solicitor's fee. There's definitely going to be a moving cost as well. So those are the sort of things that will be fleshed out in that conversation. And solicitors' fees, vary wildly. I mean, in some cases, you're having to pay a proportion of the lender's legal fee as well as your own. So first-time buyers, probably around 1,000, maybe £1,500 for a solicitor, a good solicitor. There are others that, I mean, I'm talking more London prices. Obviously, Alison, I know they can do it cheaper out in the countryside. But that's not uncommon. It's £1,500 but then you've got control of it yourself. So again, depends on, and the other thing, certainly we would recommend a home buyer's report. So getting a survey done on your property prior to finalizing the deal. So there are three levels of survey. There's kind of the step one is a valuation report where they're literally going around with a clipboard saying, is the house standing? Does the roof look okay? And, is the house worth that sort of money? And that's benchmarked on properties that have sold in the local area within the last 6 or 9 months or so. The level two report is what they call the home buyer's report. I would strongly recommend everybody who's going to buy a property to have one of those. That again is a further 1,200, £1,500. But if you think that you're paying hundreds of thousands for a property, it's a small price to pay, and they'll come back to you with a more in-depth report on the state of the walls, the roof insulation, etc. And if you want to go the whole hog, well, they'll go round and pull up floorboards and check for insulation issues. A level 3 report, which could cost you around 2,000, something of that ilk. And again, depending on how much money you're spending on a property, would most definitely, and the visual state of it, would most certainly determine whether you went for a level 2 or a level 3.
Sure. And are there particular kinds of mortgages that are very popular these days? I know back in the day when I was looking at buying a property, endowment mortgages were very
Of
much the
course.
rage.
I had one of those too, yes,
One of
until
those.
the scandal broke. Yes, exactly. Exactly.
So what's the position today then?
Well, the funny thing is, I mean, nobody sells endowment mortgages today, but it's still part of the CeMAP course that you have to learn about them, which is quite ironic, really. But I mean, generally speaking, obviously, is a fixed term deal, and that locks you in for 2 years, 3 years, 5 years, even 10 years if you wanted to, although I certainly wouldn't be recommending a 10-year mortgage with the way that interest rates are fluctuating so much. You just, don't know what's going to happen. At the moment, it's about 50-50. Most people are going, 50% for a 2-year, thinking that they'll come down maybe half a point, 1 point at the end of that 2-year period. So they'll save some money. Others feeling a bit more risk averse would rather know, particularly first time buyers would know, that's what it's going to cost me for the next 5 years, and they can budget accordingly. You can also get a tracker mortgage. So a tracker mortgage is linked to the Bank of England base rate, and as the name suggests, goes up and down according to what the rates are doing. It's more risky, but again, in the short term, for somebody taking a bet on rates reducing, that's also another option to look at. There's also discount mortgages, so it's a fixed discount off the standard variable rate. Again, you're taking a punt as to whether the interest rates will come down. It's capped in terms of how far it will go down. So again, that's what the broker will discuss with the client based on, said, their circumstances and their appetite for risk.
Sure.
And bearing in mind, obviously, we're talking substantial, well, certainly in London, mortgages obviously are a substantial piece of somebody's outgoings. It's definitely important they get the right advice on
Absolutely.
how they're going to fund their purchases.
Yeah. So turning to the buy-to-let market,
Okay.
what are the main changes in the buy-to-let market over the last couple of years?
Well, certainly the tax implications. Unfortunately, our Labour government feel that anyone who's got a second property as a buy-to-let is a wealthy individual. So there's stamp duty surcharges on second properties. The tax breaks for a buy-to-let income are not there. You can't offset as much of the renovation and repair cost as you could. So the margins are getting slimmer. So your return on investment is reduced. Having said that, there are still many people that are continuing to invest in that sector. On the other hand, we know loads of clients that are trying to ditch their buy-to-let properties because it's not as lucrative as it once was. There's pros and cons. Obviously, the advantage, it's a long-term investment. And, if you're thinking ahead for potential retirement income, in fact, I had a meeting with a new client yesterday. They've got 5 buy-to-lets. And they're looking at growing that to 10 over the next 2 to 3 years. So they feel confident that the market, is still there for them. And, so a 10 property portfolio is definitely manageable. So, but he's in the building trade, so he's doing his own maintenance, and so it's a different set of criteria.
And how much deposit would you need for a buy-to-let mortgage?
Okay, so the rules for buy-to-lets are different. So you need 25% deposit for a buy-to-let mortgage. So the maximum you can get, there are some lenders actually that would go to 80%, but the majority is a 75% loan to value. However, the other advantage of a buy-to-let is that you can do, and more easily, do an interest-only mortgage. And the repayment mechanism is obviously sale of property, at the end of the term. And there isn't the same restrictions in terms of your age at the end of the term as there are on a residential property. So there are different ways of doing it. I said the most common 25% deposit, interest only, over a 20 or 25-year period. And the criteria for a lender assessing that is linked predominantly to the value of the property and the rental income that's being produced. So they do take into account the owner's income, but that's really a safety net in terms of if they didn't have a tenant in there for 3 months, can the owner afford to pay the mortgage? So that's a kind of a background assessment. But if your property is attracting a monthly rental income of, let's say, 1,000, and your mortgage is £500, I'm talking about an interest only mortgage, they're comfortable with that.
And people wanting a buy-to-let mortgage, can they do that if they're just an individual, or do they have to create a company, like a limited company, to put the mortgage through?
No. Most of the people, or certainly that I deal with, are starting off as an individual, just kind of testing the market. So they're buying in their own name. The advantage of doing it through a company is obviously it's not seen as a second property, so you don't have the increased stamp duty, and then you can offset the costs through a limited company in terms of income and expenditure. It's slightly easier, but obviously there's other complications in terms of having to manage a limited company to do that. And of course, if you're buying as an individual, the rental income does have to be declared on your self-assessment tax return.
Yeah. Can you live in your buy-to-let later?
No.
No.
Well, you could change the mortgage type. So a buy-to-let mortgage, you cannot live in that property yourself.
At all, at any point?
At any point. No. I mean, you can, if the tenant, leaves and you think, okay, well, I'm not going to carry on renting it out. I mean, if you've still got another property, I mean, it's going to be obvious that you can't live in both.
No.
So that's something to obviously take into account, but you'd have to change the mortgage type. So it would be a mortgage. You just remortgage it for a standard residential mortgage.
And is there a limit to the number of buy-to-let mortgages you can have at one time?
No. Again, some lenders would put a cap maybe on 10 as a maximum. But obviously there are a lot of lenders out there that deal with large portfolio landlords. So no, you can have as many as you feel is necessary. Although the more properties, the more headaches.
Yes, indeed. Especially if you're not a builder yourself. Yeah, absolutely.
Exactly.
It's been absolutely lovely chatting with you. The time has just flown.
Oh, okay. Goodness, yes, half an hour's gone already.
I know. Is there anything you feel I've left out that you would like to mention?
how to get in touch with me.
Yes, that would be good, wouldn't it?
Yes, it would. Okay, so I'm Nigel Codron, MB Associates. You can get in touch with me by email on nigel@mb, that's B for Bravo, associates.net, or call our office on 0208 so come on, Nigel, 652 5240. I don't give that number out that often. So are we open 7 days a week? The office isn't. I tend to work 7 days a week as and when is required. I'll put my mobile number out on here as well, 07977 129 241. If you'd like to call me for a brief information chat, I'd be happy to help. And lastly, what I do need to say, and this is kind of standard in our industry, as a caveat, your home can be repossessed if you don't keep up your payments. So beware.
Nigel, it's been a very informative chat. Thank you so much for sharing some top nuggets there about your market. And I'm sure that listeners will be very, very interested in what you've had to say. It's been very informative. Thank you so much.
Great. My absolute pleasure. Thank you so much, Alison, for inviting me onto this.
You're welcome. Bye for now.